let's figure out what Philip Palumbo is thinking. He's founder and CEO and CIO at Palumbo Wealth Management. He joins us from Great Neck, New York. Philip, good to have you back with us. It has been a while since we spoke. What are you hearing from your clients right now as we've seen markets whipsaw over the last couple of weeks?
You used the word perfectly, uncertainty. I mean, it's a word that everybody's using. Everybody's very fearful of Trump and the way he's erratic and how quickly he's moving forward with all his game plan that he talked about during the campaign. Nobody realized or really thought that he'd move as quickly as he is moving, and it's scaring a lot of clients.
So do they buy into this notion, and do you buy into this notion that the president is not paying attention to financial markets or does not care about what he sees with financial markets, as he said?
Yeah, I don't buy into that. No. So I think he's got one eye on tariffs and one eye on the overall markets.
Okay.
I definitely think it's really important to him to understand where the economy's going, where the market's going, because Trump is a scorecard type person. And I can't imagine he's not really looking at the markets. And at some point, there'll be a Trump put that'll be put into place.
So in terms of where you want to put money then, are you trading for maybe future Trump headlines that might undo tariffs and undo some other things? Like, how do you kind of get your head around it then, Phil, in terms of if you think that ultimately he's going to look at the markets and maybe, see some of the impact, and then will he undo some of the things that he's done already in your view?
Well, it's a lot bigger than that. It's more about the way I describe it is you have, one side of the barbell is the tariffs, and you got the DOGE, which is the cutting of the deficit, which is really contracts an economy. The other side of it is deregulation and the extension of tax cuts, which actually can improve an economy. And it's his bet. And Besson talked about this last week, that they're trying to go from government public spending to private spending. And if they get that right, that's going to be beneficial to the overall economy. So for us, it's not about trading. It's about, uncertainty creates opportunity. Volatility creates opportunity. And if you look at some of these businesses, I mean, if you want to look at the Mag 7, NVIDIA and Amazon as an example, these businesses, their multiple has been cut in half, right? So when they're growing at 10, 15%, 20% or 30%, they're even greater than that. And look at the forward multiple of the market trading pretty much where they're trading. And the S&P is projected to grow this year around 7. So there's always opportunities with volatility. People got to get excited about this opportunity with volatility because it's an opportunity to put money to work with great businesses over the long term. Now, just caveat is can it go lower? Yeah. Can we hit a bear market? Can we go into recession? You absolutely can. Nobody can time that. Nobody can figure that out. You just have to look at opportunities as it comes to you in buying great businesses at a cheap price.
Well, I want to talk about some of those companies that you do argue are great businesses. Some of the stock picks that you sent along to our producer, Paul Brennan. Northrop Grumman on your radar, ticker NOC, down 3.4% today. A stalwart when it comes to Pentagon contracts and government contracts. Why are you bullish on this company in a Doge world?
Yeah, well, we'll think more about all globally, right? So globally, defense spending is going to increase. We have to restock from what we gave to Ukraine. All of that is going to be beneficial to Northrop. In addition to that, they're winning major defense contracts, that will last greater than 10 years. So free cash flow estimates going forward, on average, you're looking at around 16%. So we think they're beneficiaries of that. And if you think about where they're trading today, they're trading around 20% below fair market value. So from our standpoint, we think at this level here, if you're a long-term investor, we think you can do very well.
The company, though, still gets close to 90% of its revenue just from the United States. So if there are cutbacks if there are cuts in the United States, that's a really big deal. I mean, very little of its revenue comes from outside the U.S., according to the terminal.
Right, there's good and bad to that. In my opinion, I don't feel like the DOGE is really going to go after defense spending as maybe some people are anticipating. I just think that that's an area, especially when you think about Trump and what he's looking for, if we want to secure our country, especially all the money we spent in Ukraine and different types of defense that we brought over there, we got to restock and we got to strengthen our country. And it starts with defense. So we really believe that we'll continue to see spending there. We don't see much of a decrease in that area.
It's interesting, though, because we have heard comments from President Trump say, let's cut our military budget in half. Let's cut back on defense spending, and I think he has tried, and he's, I guess, maybe hopeful of getting others like President Putin to do the same thing in terms of cutting back, or China, right, in particular. So I do wonder that if he follows through or makes any progress on that, what does that mean for somebody like Northrop Grumman?
To your point, Pete Hegseth, the defense secretary, said that beginning immediately, this was back in February, the Pentagon will pull 8%, which is about $50 billion, from non-lethal programs in the current budget. Did you look at that as not affecting a company like Northrop Grumman? Because we did see some pullback on companies such as Palantir at that time.
Yeah, and that's why you're seeing some pressure on the stock. But overall, it's the major defense contracts that they already won. That's 10 years or greater. That's going to add to the bottom line.
Okay.
We don't see them cutting back those contracts. I mean, they're really important to our country. And Northrop, what they do, and especially all the missile programs that they're part of, we don't believe that's going to be cut.
Real quickly, there's two big financials that you like. JP Morgan is one name that you like. It is down about 18% since mid-February. We know financials, definitely were riding a high for a while, certainly coming off the elections. You still think JP Morgan is a buy?
Yeah, so that's exactly right. So it was buying a rumor, sell on the news, right? So after Inauguration Day, most of the financials decreased a lot from that point. But at the end, if you think about, I think, where we're going with the economy, we think of JP Morgan, the largest bank in the world, great on the commercial side. On the investment banking side, we do think M&A activity will pick up. If you look at M&A activity for January, it was down 30% relative to last January. And so we're not concerned about that because we feel like the deregulation hasn't been really embedded into the economy yet. So once some of this black cloud subsides, we think financials will be big beneficiaries, and you're buying them at a lot cheaper price than they were just a couple of 3 weeks ago.
All right, let's leave it there. There are a couple more stocks I want to talk about, but we're running out of time, so I do want to have you back with us very soon. Philip, always good to check in with you. Philip Palumbo is the founder, CEO, and CIO at Palumbo Wealth Management.